Before we get to the nuances, I am often asked some questions over the years, and I think those questions need to be addressed up front. My co-evangelist, Gayatri, is going to ask me those questions, and then we will move on to the specific operationalization of the industry through the law and its supporting act.
Thank you, sir. It was a great overview about the law CICRA, but there are a few questions that are being frequently asked.
Okay.
So, one of them is why at all do you need CICRA?
Well, I think, the question goes back not to CICRA, but to the Banking Regulation Act and the RBI Act. The RBI Act and the Banking Regulation Act allows the Reserve Bank of India and requires the banks to provide any data that the Reserve Bank of India may ask for. Now, if a credit bureau was housed within RBI, not as a separate entity, but as a division of the Reserve Bank of India, you probably wouldn't have needed a law. However, RBI has always seen itself as a facilitator and an enabler rather than a doer. And therefore, and globally, if you look at it, many bureaus are not owned by the Reserve Bank or the central bank of the country, but the central bank creates the enabling environment. Since the Reserve Bank of India wanted to do that, the particular section that allows it to call for data would have been useless because that data would not have been able to be passed on legally to the new entity created.
Okay.
As you also know, we have 4 credit bureaus in the country now, right? And the whole idea is, like other environments, like say credit rating, for example, you will see that that enables the industry to get better service, better products, better pricing. Now, given that there is privacy and confidentiality, there are only 2 ways that you can get data to be shared. Either you take consent from every borrower, be it an individual or be it a company. That is impractical, especially for the legacy and the historical data that is already there. Therefore, there is a necessity to have a law specific to this industry. That was the trigger point. And of course, there were other issues also, because you had to then define what a bureau could do, what it could not do, what were the regulations that governed its performance, what fees it could charge, how it would be inspected, what authorized capital, how would the management going to be, all of what we talked about. There's no act other than CICRA which covers that specifically to the credit bureau industry.
So, after the question that I asked, so how has this act helped in facilitating the lending industry?
Oh, tremendously. Because I think it's all about taking informed and objective decisions. There is also a phrase which I would use at this stage, that past behavior is the best predictor of future behavior. So if you have not serviced your loans in time in the past, the likelihood that you will not service them in the future is higher. Industry has therefore been able to take more informed decisions, resulting in lesser NPAs, not sending good money behind bad money, because the customer or the individual or the company has already borrowed and is not paying and you don't know about it. And it also puts a number through the credit scores that you get on the likelihood of a delinquency happening or a non-payment happening. Cost saving happens, turnaround times have happened, and the subjectivity that comes otherwise has been significantly reduced, if not completely eliminated. So I think there have been tremendous benefits also to the borrowers, because first-time borrowers are now able to get credit because the bureau informs the lender through their reports that this person has never taken a loan or this company has not taken a loan, and therefore there is servicing capacity available. So there are many benefits, and having said that, these are still early days in that industry. So I actually see going forward that bureau scores will help, for example, in enabling differential pricing. If your score is high, why should you not get a better rate or a higher loan? Because your likelihood of delinquency is low. So there, if you look at the United States, for example, the bureau industry is almost 200 years old. In our country, it's only 20 years old. So we're still evolving as a industry. But if you ask me the question, is there a benefit? Oh, yes, there is.
Okay. So, since the act was incorporated, has there been any change in the act?
Uh, not in the act per se, but in the regulations that govern the act, there have been changes. So sometime in the middle of 2015 or 16, the RBI set up a committee, and the committee looked at everything to do with the bureau. It made several recommendations, but there were 5 recommendations which to me are significant. The first was that all banks and all lenders had to share data with all bureaus. Earlier, you had to be a member of only any one bureau at least. However, that is now not the case. And therefore, there is a kind of even playing field which comes into being, which there is an even playing field that comes into being. The second important change made was that all data has to be submitted in a given one format. What was happening was that the 4 bureaus had different formats, and the lending institutions were struggling to put them into 4 different formats and submit data. Now that they have to give data to all the bureaus, there is only one standard format. A consequence of that is there's only one standard format for making inquiries on the bureaus. Otherwise, again, the same story. There were 4 different formats going around. The fourth important thing that's come up out of this is that every individual, once a year, can get a free report from each of the bureaus. So, for example, if you want to apply for a loan, you might want to see your report and your score so that you know that there are no surprises. Earlier, you would have to pay for it. Now, the regulations say that I can apply to any one of the 4 bureaus once a year and get a free report. So, actually, I could get 4 free reports a year, one from each of the 4 bureaus.
Okay.
And the last significant change was, and which I think is important also, as the others are, is that the score that we are talking about ranged differently for each bureau. So, for example, one of the bureaus was 300 to 900, 300 being the lowest and 900 being the highest. Another bureau was 0 to 999. So, a 700 from one bureau didn't mean the same thing as a 700 from another bureau. The RBI, through that committee that was set up, changed the regulation and said the score has to be in the range of 300 to 900 for all 4 bureaus. So at least you are comparing apple to apple and not chalk and cheese.
Okay. So are the scores only one of the way of evaluating the creditworthiness of the individual?
The score is a mathematical number which makes it easy for a lender to decide whether to give a loan, and if so, on what terms. Like I said, if you have a low score, it's not that you will automatically get rejected. But going forward, and I think some of the lenders have started this, the difference will be in the interest rate that they charge you. A lower score will result in a higher interest rate. Having said that, as of now in India, the credit bureau report and score is not the only deciding factor for a loan. Banks and lenders will take into consideration tax returns, salary certificates, bank statements, and many other traditional methods that they've been using, supplemented with the score that comes out of the credit bureau. Going forward, again, if I was to look at a crystal ball, it is possible that at least the smaller ticket size might be able to enable a yes-no decision based on a score.
So, lastly, what are the facets that CICRA does not address?
Well, I wouldn't put them as CICRA does not address, because I think when the Act was passed in 2005, the industry was just being born. And therefore, to the extent that it was new, it covered everything that was required then. Over the years, some regulations, like I mentioned about the standardization of the score, the standardization of the data, all that has changed. Is there scope for the bureaus to do more? Yes, there is. Marketing is one, auto decisioning is the other. And there are 2 major areas that need to be addressed. One is the sharing of alternate data. Alternate data being insurance data, utility data, electricity bills, telephone bills, and all that. The other is the alternate data that comes out of trade data. So, for example, if I am a supplier to you and you have to pay me, and if you don't pay me on time, I could actually report that to a bureau. Some countries do have that as one component of a bureau's information. However, India is far away from that as yet, partly because I don't think the trade that we are talking about is organized enough and dependable enough and trustworthy enough that, I'm giving genuine, correct and accurate data, and it's that I like you and therefore I'm giving you a higher, I like you and therefore I'm giving you a clean chit, and if I don't like you, I'm saying that you didn't pay on time. On the other hand, the banks and all, which are regulated by the Reserve Bank of India, obviously have a larger sense and requirement of discipline. And therefore, the difference lies there. So I think the credit bureau industry, if I look at it in the next 5, 10, 15 years, will fine tune the current behavior that it has, the current areas that it looks at, and keep seeking to add new dimensions. Dimensions like alternate data, as I mentioned. And when that happens, appropriate changes in CICRA will have to happen also. Having said that, again, for example, if I want insurance data, it's not about CICRA. It's also about the Insurance Regulatory Act that has to change. If you want telecom data, the Telephone Regulatory Authority has to pass the change in the Telecom Act. And there is a lot of talk nowadays about the right to privacy. And therefore, I think it's a very exciting time and a very uncertain time in that sense as to how this industry will develop. But develop it will, because analytics, artificial intelligence, all of that is going to make data the new oil, as we call it. And that data will come from bureau information. So that was the whole module that you went through on two aspects. One are the stakeholders that we talked about, if you recollect, and the second is the entire CICRA Act. Now, I think as a practitioner of using credit information as a lender, it's important that you should read the Act more carefully. Trust me, it's not very difficult to read, much as you would feel that an Act is always difficult to read and it's a big, thick thing. This one is not. So I think you should read the Act and know the details that we have not perhaps talked about today because of the very nature of the introduction that I'm doing to this Act for you.